Why is this stock about to 26x? We'll find out. So the Very Good Butchers, also known as the Very Good Food Company, they're one and the same. So look at this. Due to overwhelming demand, processing time on orders will be 2 to 3 weeks. Very good sign. Very nice website. Very good looking wrapping. And if you've tasted it, you'll know it tastes the same, if not better, as real meat, because it actually is meat that just hasn't gone through the process of an animal. It's gone through a different process. Listed on the Canadian Stock Exchange. If you want to buy this whole company outright, the price tag is $328 million. So what do you get for this $328 million? Revenues for the quarter, 1.1 million. So times that by 4 for the year, roughly 4.4 million, say 5 million. You're paying 328 million for just 5 million in revenue. Sounds very high, doesn't it? Though, looking at this increase, 400% year over year, with gross profit margin 42%, improvement from 34%, and we'll get total assets 6 million, including cash balance of 3.5 million, outstanding debt 1.1 million. Though the reason why this is going to be hyper growth stock and why you're paying this massive multiple in the revenue, I will get to shortly. So as I said, $328 million seems like a lot for the company now, though what if it was to grow into something like Beyond Meat, whose now revenue is $490 to $520 million. So what can revenue growth look like in these plant-based meat companies? Well, take Beyond Meat for example, 32 million in 2017 to 87 million to almost 300 million in 2019, and as I stated before, 500 million or thereabouts for 2020. So if this repeats itself with the Very Good Food Company, you'll likely easily see a 10x or more on your money. So what makes a share price grow? It's the underlying business. So what is happening with the underlying business of the Very Good Food Company? Well, already built out as a production facility by its previous plant-based operator, the Rupert facility comprises of 45,000 square feet of production, refrigeration, warehousing, R&D, and office space. The Rupert facility is expected to be capable of producing up to 37 million pounds of annualized products to be phased in over the next year, representing an approximate increase of 2,690%, which is 26 times, for those who didn't know, over expected annualized production capacity of the company's Victoria facility of 1.375 million. So if we take the current revenue, roughly 4 million, times by the increased production, 26, we get a new revenue of $104 million per annum, which makes the price tag of about 328 million seem quite cheap. So does it stop there, or could the Very Good Food Company go as Beyond Meat has and go international, opening up more facilities? So Beyond Meat is now going to Shanghai. It's going to be a very big market, 1.5 billion people in China, compared to about 300 million in America. Correct me if I'm wrong down below, but the Very Good Food Company could do this also and expand, and who knows what the future holds. No one expected things like Netflix to go where they did. Same with Tesla. No one expected them when they had all those production issues. And very 2010, no one expected they'll take over the world. And now here we are in 2020, and Tesla could take over the world. So it's easy to say they'll do this, but we have to look at the background reason as why the world will go this way. So if you didn't know, currently about 1% of the total meat market is plant-based meats, and with these reasons here, I think it will could increase to 20%, meaning a 20-fold on the market. So the reasons are 99% less water used in plant-based meats. I know this is Beyond Burger and not the Very Good Food Company, but the reasons are the same. So 93% less land, 90% fewer greenhouse gas emissions, and 46% less energy. So if you went in the shops now and you saw the plant-based meat, it's quite expensive compared to the beef meat. The reason is the supply chains. So the supply chains for beef, chicken, all those ones have been around for years, and the plant-based meat's only just getting started. So meaning more people will produce the things needed for it. The factories will get more efficient in time. Everything just becomes more efficient to bring the cost down, and then you left these benefits and the decreased costs as well, which is why I see the 1% rising quite substantially, because the taste is actually the same. The only difference is the plants, so the grass has gone through the animal into the animals' muscles, and then we've ate it. And this one we've taken from the plant, processed it, so it's just done a different way. It's actually meat, just plant-based meat. So thanks for watching the video. Leave your thoughts below on what you think about Beyond Meats and any companies that you see 10xing and the reasons why. And if they catch my eye, I'm surely gonna talk about them here on this channel, because I'm into penny stocks, low stocks that are growing to big stocks to get the best return on your money, and they need strong backing as to why they'll do this. Why people are going to get money out of their pockets, go and put it in that company. That's what I'm looking for here. No hoopla, nothing like that. So like and subscribe, leave your thoughts below on plant-based meats, where you see them heading. It's always good to get 5 opinions before investing in a stock. It could save you a lot of money.